I welcome you all on behalf of Art University. Today, in subject of banking law and practice, we will continue with the control of credits chapter in Pakistan, part 2. So, starting with the chapter part 2, control of credits in Pakistan, starting with Pakistan investment bonds auction. Now, what are Pakistan investment bonds? These are basically those investment bonds which are auctioned by Ministry of Finance when government need money. When government is in need of money, they issued these bonds, which are known as Pakistan investment bonds. And Pakistan investment bonds are issued in tenures of 3 years, 5 years, 10 years, 15 years, 20 years, and 30 years in auction, according to quarterly targets given by Ministry of Finance. If Ministry of Finance targets are high, we are in dire need of money, like the current situation of Corona is we need money, so we will be issuing, our government will be issuing, or Ministry of Finance will be issuing the Pakistan investment bonds in time period from 3 years to 30 years. But if the financial position of the country is good, then they will be issuing less bonds and their targets will be less to the State Bank of Pakistan for issuing Pakistan investment bonds. Pakistan investment bonds are sold to meet Government of Pakistan long-term requirements and to provide benchmark rates to capital market transactions. Now, Pakistan investment bonds are not Pakistan investment bonds are not only satisfying the needs of the Government of Pakistan, not only the long-term needs requirement of the Government of Pakistan, but also it's providing benchmark rates. Benchmark rates are an ideal rates which capital market need to meet it. Benchmark rates are those rates which are set at, which are decided, like market rates are decided by Pakistan investment bond through Pakistan investment bond sales transaction, that capital market will sell their bond either more than that benchmark or even less than that benchmark. But the ideal rate will be ideal benchmark. The ideal point will be ideal sale rate will be mentioned and given by Pakistan investment bond sale through Government of Pakistan and through Ministry of Finance transaction. So Ministry of Finance sold this Pakistan investment bond also to meet long-term financial need of the country, and they decide benchmark rates for capital market of Pakistan transaction. Now, what is capital market of Pakistan? A market where your financial instrument life is more than 1 year. When we talk about the money market, its life is less than 1 year. But when we talk about the market, capital market, its life is more than 1 year and it lasts up to 10 to 20 years. So those financial instruments which are sold for long-term period in capital markets are known as capital market instruments, and the transaction related to those capital market instruments, sale and purchase, are known as capital market transactions. How Pakistan investment bonds are sold? They are sold first. Their 15 days prior notice is given in the for the auction. Targets are announced on Reuters, meet print media like all newspapers, and sealed bids are invited from the customer, from the public, from the investors. Then 15 days period from the day of announcement to the auction day is called short selling period. The day from which the advertisement is made of those Pakistan investment bonds for auction, from that date till the auction is made is known as short selling period. I repeat, the day from which in advertisement in newspaper or social media or website of State Bank of Pakistan or Ministry of Finance for the auction of Pakistan investment bond is made, from that date till 15 days completed till the auction of the Pakistan investment bonds is made is known as short selling period. Then auction committee decide the cutoff field. What is cutoff field? Cutoff field is the rate at which bids are accepted. Auction committee have the members, like there are board of directors who are sitting, or there you can say the financial experts, you can say the market experts, you can say the capital market experts, you can say the money market experts, you can say stock exchange experts. All the finance experts from Pakistan government and private sector sit together. They are a member of auction committee, and they auction the Pakistan investment bond a specific cutoff rate, cutoff yield, which is known as the rate at which bids are accepted. Like for example, if they are accepting $50 million for any one bond for 5 years, and if the bid is more than $50 million, they will definitely sell it out. But if the rate is less than $50 million and it not more than that rate is offered to the auction committee, they will auction the rate at this, the rate at which any auction is made, the rate at which the bid is accepted. Application is a bid is not the application by investor or offer by application offer by investor or any specific in Pakistan investment bond rate, Pakistan investment bond product. So to buy any product, they give bid, they offer rate, and this offer rate or bid is accepted. That rate is known as cut-off yield, and auction committee, government of Pakistan, Ministry of Finance do this type of auctions. Then we have open market operations, OMOs. Open market operations are used nowadays by computerizing report system. State Bank of Pakistan monitors the daily liquidity position of market, and on the basis of those liquidity position of the market, those reports of State Bank either inject more money in the market by lending against collateral, or even wipe out, mop up money. Now, when we talk about injecting more money against collateral, collateral is something that is pledged as security for repayment of loan. For example, if something is given as a in Pakistan Instant bond auction form, or issuing of treasury bills to the public, or issuing of collateral touch with the public, that again on that specific loan, but the amount which the treasury bill which has been sold out, or the Pakistan investment bonds have been sold out or auctioned to the public or to the investor, against that collateral, should the government of Pakistan repay of the loan, or should what they should kept as a security to repay the loan, or to issue that loan? So on the basis of liquidity position of the market, State Bank report made reports, and those reports basis either inject of more money is made against lending of collateral, or wipe out of money. Now we have read about the collateral, that is something pledges security for repayment of loan, and State Bank inject money through against lending through collateral. But if the situation is on other side, then we go for these other 3 points. That is number two, it is done through reverse repo transaction. What is a reverse repo transaction? It is known as repo, RP, repurchase, or sale or repurchase agreement. It is a form of short-term borrowing, mainly in government securities, or by outright purchasing to pay the full purchase price amount in cash. What government do? Government either, if is injecting money, they first for against the collateral, they what they do, they go for reverse repo transaction. Reverse repo transaction is known as repurchase. If you remember in last semester analysis of capital market subject, or in investment and portfolio analysis, read about capital market, and we read about repurchase agreement. So when we talk about repurchase agreement, it's a form of short term borrowing, mainly in government securities. Government borrow money for short term period like 6 months from the market, from the capital market, or from the money market, or through auction of bonds or treasury bills or other financial instruments, and then pay back that thing on the completion of that time period. That is done basically when the government is in need of money. Then in other stage, when we talk about outright purchasing, it's basically buying full, paying full price of purchase price of amount in cash. If government is buying something back, they paying full payment. Like for example, if government is doing payment against collateral, they will pay full amount of money lying against them as a loan, and then they will go ahead. Or they what will do? They will repurchase agreement will they carried out. They will on short term borrowing what they have done from the investors, or from the corporate sector, from the private company, they pay back through outright purchasing. They pay full price of that product, instrument, financial instrument which they have sold out, or which they have borrowed out to settle the financial transaction. Then third step is mops up money. Mops, as you have the name mop is, and mop is a thing through which we do cleaning of floors. Basically, it's a mop is known mops. So mops of money is attached to that. They basically wipe off money. What government do? Government wipe off money from the market by selling securities or by conducting repo transaction. What government do if there is they want to wipe out the money, if the liquidity position of the market is liquidity position of market is not is favorable, and they don't want to make sold out assets, or issued Pakistan investment bonds, or issued treasury bills, or any corporate bonds or investment bonds offered to the public or investors. What government do? They wipe out money. How? By selling securities or by conducting repo transaction. They either sell out all the securities, all the shares, all the financial instruments lying with the government, or what they do, they conduct repo transaction. Repo transaction is known as repurchase agreement, and we have read in above paragraph that repurchase agreement is a short-term borrowing, mainly in government securities, which is done when the government is in need of money. OMOs are conducted on as when market desire. It issued through routers, which is print media, and bids are received through fax or email. Fax is old way nowadays. It's through email. Only banks are allowed to participate in OMOs and treasury bill auction, and only banks like commercial banks or Islamic banks are allowed to participate in OMOs and treasury bills auction. Like mostly, treasury bills of the government of Pakistan issued are bought by commercial banks as they are financial institutions, and they are also allowed to participate in OMS transaction like repurchase, repo transaction, like which we are repurchase sale, repurchase agreement, or outright purchasing, or mops off of money, or even auction of Pakistan National bonds. So the banks are mainly buyer and seller of the open market operations of government of Pakistan. Discounting facility, 3-day repo. What is it? In Pakistan, State Bank of Pakistan has extended a 3-day repo facility to scheduled and scheduled and investment banks. This is an overnight lending facility provided to banks through which State Bank of Pakistan provide cash accommodation at a penal rate, currently 10% to any needy bank by undertaking a reverse repo transaction with it. That is basically when State Bank has extended a 3-day repo facility to scheduled banks or investment banks. Which banks are all these banks registered in Pakistan like Al Falah Bank, Habib Bank, National Bank, Elite Bank, MCB, all big five banks, including the small banks, as well as investment banks are those investment houses who offer different investment products to the public. What is that? It's overnight lending. Overnight lending, a fast lending facility provided to banks. Banks can if on immediate basis, on need basis, borrow money from State Bank of Pakistan at the penal rate or at current rate of 10% to any bank by undertaking a reverse repo transaction with it. What State Bank do, if any bank is in need of money, they can take money from State Bank of Pakistan at 10%, and it can be pay back on even reverse repo transaction by government of Pakistan or State Bank, or through repurchase agreement, right? Then cash accommodation normally for overnight, however, transaction period can be lengthened to 3 period or more to cover occasional long weekends. How it is done? If the government, if any bank is in needy and they borrow money from the state of Pakistan through discounting facility, cash accommodation is normally done overnight, means in 24 hours operation, 24 hours time period. But sometime due to weekend like Saturday, Sundays off, banking holidays there, state bank is off. So if this type of weekend occurred between the transaction, so it can last to 3 days. So that's a known discounting facility for 3 days repo. State Bank also use changes in discounted primarily as a way of signaling or changing in monetary policy. State Bank can also change in discount rate primarily because of giving a market a message that monetary policy is being revised. Like if you see from January till June, State Bank has revised interest rate 3 times. First, it was reduced from 11% to 8%, then from 11% to first it reduced from 12.25% to 11% in December. Then in March it was reduced to, in April it was reduced to 8%. Then in June it is reduced to 7%. So now the State Bank is charging interest rate 7%, and it is reduced from 12.2% to 7%. Almost 5.25% interest rate has been decreased in the market to facilitate commercial banks lending as well as to local consumer banking products buyer like us, who take car loan, who take house loan, who take business loan, who take other loans from the banks. So that this is basically signaling message that government is in need of money, banks are in need of money. At low interest rate, more lending is done. At high interest rate, lending is done a little bit. Second option is to encourage exports, low interest rates are offered. To discourage exports and encourage imports, high interest rates are offered. So this is basically a discounting facility given to the banks when they are in need of money at 10% rate, and they then reverse repo is done. Repurchase sale is done by State Bank when the transaction need of the bank is over. And this facility is known as discounting facility. Its time period is from 24 hours, which is known as overnight operation, to 3 days. And the rate changes can be done, discounted changes can be done in this discounting facility as per State Bank direction or to revise monetary policy. I hope it is clear. Exchange rate management in Pakistan since 2000, free float regime is in place. What is free float regime? Exchange rate is determined on supply and demand position of the market. It's not determined by the market its own, but how much exchange foreign exchange is available in the market, how much demand of foreign exchange is raised in the market, and how much supply of foreign exchange is provided to the market against that demand. So demand and supply rule of basic rule of economics decide the exchange rate management, which is known exchange rate management is done in Pakistan and it's done since 2000. It means today is 2020. So 20 years have been deciding the exchange rate, or we have been managing the exchange rate to free float regime, which is simple economics rule of demand supply of position in the market. Factors requiring exchange rate management. Number one, appreciation depreciation of rupee vs US dollar in interbank market. Yes, it's a main factor. $1 is equal to 167 Pak rupee. It means the interbank rupee is depreciating and interbank US dollar is accelerating or appreciating. Second, heavy fluctuation in foreign exchange market and interbank. Heavy fluctuation transaction. You know, today dollar is 167. Maybe it was before 6 months. Uh, it was around 130 rupees or 137 rupees. Last year this dollar was around 1 135. Today this dollar 167 168. It means dollar rate has increased and there are heavy forex fluctuation in interbank. It's not about the dollar, it's about the pound as well. It's about the Qatar dinar, it's about the real, it's about Saudi real, it's about the dinar, it's about the other transactions currency available in all over the world. So interbank heavy fluctuation foreign exchange market is also factor requiring for exchange rate management. Third is market sentiments, which is known investor behavior. Investor behavior matter a lot due to nowadays if you see corona COVID-19 disease. Investors are not happily investing not only in Pakistan but all over the world. Flight of capital is not only done in Pakistan but all over the world. You know, Shenzhen block, 36 countries, European Union block, even that which tourism, which economy was based on tourism, and due to coronavirus disease, the traveling banned and all those things banned. Their season was this summer, May, June, July, August, 3 to 4 months season. That investor has not, no, they're not traveling. Investors have taken out their money from the market, and all the big stock exchanges of the world are going down. Pakistan is much more better than other big states, but if you talk about G20 countries, all the economies are near to crash, and all the economies are going bad. So nowadays they are making wrong information in the market that corona has finished in New Zealand, corona is finished in other developed states of the world. It's not the fact corona cannot be finished all over the world. It will take time to vanish it out, but maybe it exists all over the life. Like polio, another disease, we have AIDS, polio, HIV, we have hepatitis, we have other diseases. So this message is only enough to discourage investor and to change his investment behavior in the market. So market sentiments played an important role in foreign exchange management as well. Fourth, heavy payment of commercial and government. Sometimes heavy payments are made by the government and sometimes heavy payments are made by the commercial banks and commercial institutions. What do you see? Like to run the operations of the companies, private sector or multinational company, commercial institutions are paying them loan, commercial banks are offering them loan at even low interest rate, and they're taking borrowing a lot of money from the bank to meet their financial need. But on other hand, banks will get bankrupt, and on other hand, government is also trying to support the government operations, government run government machinery on heavy loans, heavy donations, heavy aids on specific interest rate. Like Asian Development Bank is charging 4% on any government projects, same World Bank is charging interest, same IMF is charging. All those heavy institutions, all those big institutions all over the world who are financial lending institutions are providing loans at different high rate, which makes heavy payment, and this also disturb the equilibrium of foreign exchange management. Unforeseen events like coronavirus, unforeseen events like earthquakes, unforeseen events like any other natural disaster, tsunami, etc. This also played an important role in foreign exchange management. So foreign exchange management is disturbed through these five steps. First, appreciation depreciation of rupee value than US dollar, heavy fluctuation in forex market, interbank market sentiments, which is investor behavior, heavy payments by commercial institution or corporate bodies or corporate sector or private sector or multinational company or by the government, and unforeseen events as well. Clear? Going ahead. Factors affecting exchange rate: trade activities, imports, exports, natural thing. If your imports are high, exports are less, then it is a trade deficit. If your imports are low and exports are high, then it's a trade surplus. If your imports are equal to exports, then you are a trade balance, which is an ideal situation. So our trade activities, always Pakistan issue is imports are high, exports are less, so we are trade deficit country. Foreign investment, FDI. Foreign investment nowadays, not only Pakistan but all over the world, foreign investment has been decreased. Why? Because uh, investors are behavior have changed, market sentiments have changed. Investors are in a state of fear that maybe their money could not lose in any stock exchange, any financial market, any economy. To save that, they are not taking an investment decision. Home remittances, like foreign payment coming to Pakistan from abroad country. Foreign people, Pakistani who working abroad, send their money to their home country, which is Pakistan. So those Pakistanis who are working abroad and sending money to Pakistan to their family member, this is known as home remittances, and it comes through banks. Market saturation. Market. What is this? May be a new terminology for you all students. So let's have a small definition of it. Market saturation is a point at which a market is no longer generating new demand for a firm's product due to competition, decreased need, obsolescence, or some other factors. It's a point where market get mature. Market situation, you link it to market maturity. When market is mature, there is no demand for your product. There is no demand for your services. There is no demand for your company activities due to market competition, due to decrease in need, due to change in taste, due to change in behavior, due to change in obsolescence, and maybe some other factor. Let us take example here of education sector of Pakistan and travel agency related businesses, airline business of Pakistan, and not only Pakistan but all over the world. If you see school, colleges, universities that were operating in private sector or government sector, all are near to bankruptcy or default situation, financial loss. Why? Because they are closed due to coronavirus disease, and they are near to bankrupt. Second, if you look at airlines industry, ticketing agency, travel agency business, all the business has been near to closure. Why? Because uh, due to coronavirus, their message is stay home, stay safe. Don't go outside. Don't go out of city, out of country, out of state, out of continent, which is making people not to travel. And when not to travel, it means no travel agency business, no airline business. Secondly, is talking about the students. Schools are closed, colleges are closed, universities are closed. They are doing online teaching. Students who are elected in online teaching, maybe at school level, at or very low level or kids level, they maybe leave schools. Same college level, some teachers are competent enough to do online teaching, some are not. So maybe at college level, they find out private colleges are doing loss, private schools are doing loss, and this industry is slowly gradually closing. Samely at private universities, if the teacher are competent enough, professor is competent enough to do online teaching, the university is running. If not, or if they do sometime, if they do hanky panky, in that case, then this is a situation, and this university will nearly close. So the one who have changed him or herself during this pandemic, coronavirus pandemic, in Pakistan or in all over the world, in school, college, or university, or education sector, or even travel agency, or traveling, or airline industry businesses, or even food, it is also affected. So these three are market saturated nowadays due to coronavirus. It's not that people will not go in future. People will definitely travel. People will definitely go to foreign countries. People will definitely go to school, college, university. People will definitely go to food restaurants and sit there and eat. But at the moment, the market is saturated. There is no more demand, and people are sitting at home due to their insecure feeling due to coronavirus attack and pandemic attack. So they don't go out. So this is situation, basically market saturated. When we talk about market saturation, in fact, in exchange rate, a point where market is no longer generating new demands for firm's product due to competition, decreased need, obsolescence, or some other factor. That's a case where market is not creating demand for foreign exchange rate, market not creating demand for interest rate, market not creating demand for other economic indicators through which trade is done, or through which economy become stable. So this is a situation where market get fully saturated. Political factors are letdown of the government without complete tenure, fight between, you can say, if we talk about the US, fight between Democratic and Republican to get the presidential seat. As you know, that 2020 election has been started of the in US presidential election. So both parties are fighting to make defame one another and to get the seats. Same are done. Same is done in England last year. Same is done in other parts of country in in same way. And in currently, if you see political situation of Pakistan is even bad. It's not only coronavirus, but politically we are very suffered due to this coronavirus attack and the pandemic. So this is also affecting exchange rate fluctuation in Pakistan. So these five factors, trade activities, foreign investment, home remittances, market situation, and political factors are additionally playing a role in affecting foreign exchange management rate in Pakistan. Foreign exchange transaction, there are four types. Ready, settlement on deal date, Pakistan. Buy at the moment, sell at the moment, and get the money. Value term, settlement on next day, Canada. Settlement on next business day is known as value term. It is done in Canada. Spot, settlement usually in 2 working days in international practice. Spot is transaction of foreign exchange transaction which is done in from 24 to 48 hours time period, like in 2 days, and it's international standard practice basically all over the world, which is followed to do transaction in foreign exchange. Forward settlement at some future date ahead of spot. Forward settlement is you buy do transaction today, but you pay money. You decide to pay money in future and at a future date uh, ahead of the spot. So it means your foreign exchange transaction you done on some forward date, on some future date. That is known as forward settlement. This these are four basically steps in which foreign exchange transactions are. Foreign exchange swaps. Foreign exchange swaps involve foreign exchange swaps involve exchange transaction. Let's read about what is foreign exchange swaps. Foreign exchange swaps involve the sale and purchase of foreign currency against domestic currency with an agreement to reverse the transaction at a specified future date on mutually agreed price. Sell buy swaps are used to mop up surplus rupee liquidity from the market. Buy sell swaps are used to inject rupee liquidity in the market. What foreign exchange swap is basically selling your currency against foreign currency on the agreement that the reverse transaction can be made at a specified future on mutually agreed price. Like you sell your security, your currency, like we sell PKR to against dollar, or we sell dollar against PKR, and we decide that we will reverse this transaction, sale transaction, on any future date, specified future date on mutually agreed price, the price on which all we all agree. We sell buy swaps are used. Then there are two types in that. First is sell buy swaps, in which we clean up, we wipe out, we mop out all surplus rupee liquidity from the market by selling and buying swaps. And when we go for buy sell swap, what we do, we inject rupee liquidity in the market. So basically this foreign exchange swap is done when your market, your capital market is in need of money, and it's done on base of liquidity, like we studied in the previous slides, that when the country liquidity situation is more vulnerable, State Bank of Pakistan inject more money against collateral, or State Bank of Pakistan wipe out money through selling out all security for that country. So it's on the base of country financial needs as well. This is decided. So financial swaps are done in two types: sell buy swaps, buy sell swaps. Sell buy swaps is that in which we wipe out surplus rupees liquidity from the market, and buy sell swaps are that in which we inject more rupees in liquidity in the market to run the financial market effectively. Forward transaction. In forward transaction, there are three types of steps. First, outright sale purchase of a currency against another for settlement at a future date and at a predetermined exchange rate. First is done how in forward transaction. You outright sale or you outright purchase a currency against another currency with settlement at any future date at predetermined exchange rate price of that currency. In forward rates, rates are quoted as premium or discount over spot rate and depend upon interest rate differential of two currencies. In forward rates, for transaction, two currencies are taken. Rates are quoted as premium or discount over spot rate. Spot rate is what, like on the spot transaction of buying selling, like in Pakistan stock exchange, which is done. It's mostly done in Pakistan. And that spot rate selling discount is State Bank of Pakistan intervention in foreign exchange market. FX stand for foreign exchange market. State Bank of Pakistan intervenes to maintain stability in market, to ease down the market from speculative pressure, to stabilize the exchange rate, to fulfill policy objective. What State Bank of Pakistan do intervention is it maintains stability in the market. Like we did in last slide about the currency matching, about the currency discount and premium, about the higher currency rate and lower currency rate, about removing differences of price between them, and all those things. Second, it is down. It relaxes the market from speculative pressure. Speculative is the person or third party who exploit both buyer and seller in financial market.